Good evening, everybody. I'm Pierre Ravet, the Daily Trader. It is November 30th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is up $13.87. That's 7.67%, closed at $194.70. Post-market, we are up by $1.32, closed at 196.02. What happened today? Jerome Powell was interviewed today live. And what he said basically is that he had to raise the interest rate super high, super fast, but that the next hikes should be a little bit smaller in order to attain the appropriate number that will be required to maintain the inflation in check and get it back to 2%. It seems to me that the future rate hikes will not be as big as the ones that we had at 0.75%. This had a big impact in the market. So look at this, Tesla is up by over 7%. So let's look at what this now means technically. So technically, we were into a downward channel, and I told you it's not a good idea to buy into a downtrend because you are buying high because the stock is going lower. So now we are outside of this downward channel, outside of the downtrend. So it means that we are not going down anymore at the same rate. There's a slight possibility that we continue going down, but this is a slight possibility. Most likely, we are either going sideways. It's possible that we go sideways for a little bit of a while before going higher at a later point in time. So if you are a value investor that like Tesla and want to buy Tesla because of the fundamentals of Tesla, I basically have been telling you guys, don't buy into a downtrend. So now our downtrend is over. That's a way better time to buy from a fundamental perspective because we are outside of a downtrend. Now, because we are outside of a downtrend, as I said, we could be going sideways. It's possible that we go sideways. So if you are a value investor, a fundamental investor, then you should not care that much about going sideways because most fundamental investors don't mind holding a stock when it goes down. So you should not mind holding a stock when it goes sideways. That's for the fundamental investor. Now, for the more technical traders, this is not a bull trend yet. This is not a bull trend yet. We don't have stochastic over 60. And we have not broken 198.12. We are very close to 198.12. So these are risk decreasing criteria. Going above 198.12, it's better if stochastic over 60 is there. And also I need to mention to you guys that we have some resistance at 205.16. So if you decide to buy right now, you can always buy at any point. If you buy right now, just be careful about 198.12. There might be a reversal at 198.12. And there might be a reversal also at 205. So if you keep that in mind, you can get in right now and you can get out if there's a reversal. But to decrease risk, we should wait for 198.12 and stochastic over 60. But you can do what you want. Let's take a look at the 1 hour chart. So this is the first candle of the day right here. So we opened at 182, went right there to the downward resistance, could not close outside of the downward resistance. Then the second hour came down. Third hour was also down, but then we followed this support that I drew today, but I could have drawn it yesterday because we had this low right here that we knew. And yesterday we made this low right here. So if you join two consecutive lows, then you see that what happened today was just par for the course and was just right smack on that support. Even though I did not draw it, it was there. It was there for you to draw. It's just putting a line between two lows. Right now, we have established this bullish channel, and by 1:30, look at the candle that we had at 1:30. Boom, super big candle. Stochastic went from 37 to 99, boom, with one candle. Then the next candle was just a pullback, but a strong pullback. It came down, but because we have a long wick at the bottom, it shows that we were pushed back up towards the end of that hour, and then it continued to launch. So right now we are already coming very close to this upward resistance. This is also something that we need to keep in mind. Let's go back to the daily chart. So on the daily chart, we don't have stochastic over 60 yet. So this nice candle, this is not a move that we can trust. We could need a few more candles to see where things are going before really declaring that we are outside of the congestion zone and that a new trend has started. Because right now, this is a very tight bullish channel. So if I take these lines and put them onto the daily chart like this, we see that it's very tight. It's very tight and it's not going to last a long time. We have other examples of things getting really tight here. So this was really tight, and then we had a pullback, and then we could start thinking that, okay, this is a bit wider. And then we had another pullback. So this was a little bit wider. And then we had another pullback, and this was the final size of the thing. Basically, this is super, super tight. We should be expecting some other movement. And then when we have a better picture of what is the actual move, we should get that better picture within, I don't know, 2, 3, 4, 5 candles. And then stochastic over 60 should be there. And we could have a risk-free opportunity. Stochastic at 40, so it's not at 60 yet. We have RSI almost 250. We had this MACD crossover, and DMI is still bearish. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.